Good afternoon, good afternoon, good afternoon. Market just closed and welcome to another Wall Street Wednesday. Today is June 16th, 2021, and this is actually my 51st episode. All right, so I'm going to give people a few minutes to kind of log in. Sitting here, my office is kind of warm today. You know, we're going through a national heat wave and my office is a little warm. But we'll be fine. There's a lot of things to cover today. All right, before I get too deep into this, as people join, what's going on? Hi, I'm Brian. As people join, the one thing I want to say is, again, these are just my thoughts and opinions. Telling you what I see, what I think, what I like. If you decide to do anything, I highly recommend you speak to your investment advisor or your broker. Someone that, you can talk to. What's going on, Ham? So again, what's going on, Gary? So just real quick, if you like anything, I'm going to talk about some stocks, some things I like, some positions that look interesting to me. If you decide to do anything with it, make sure you do your research, speak with your advisor before you jump in. What's the saying? This is a big boy's game. So if you're not a big boy or big girl, big boy, big girl, if you can't handle it, then don't do it. It's all about learning. All right, what's going on, Lance? All right, let me do a couple things. First and foremost, I'm not sure where I want to start, so I guess I will start with, as people join, let me start with the futures market. So I went through and I looked at several futures today, again, and last week we talked about coffee, the British pound, and the Canadian dollar. Basically, we talked about going short. Well, if you went short, good. If you went short, good. Stay short. Stay short on all those. Also, we talked about coffee. So we said short, British pound, Canadian dollar, and coffee. Well, stay short. If you got short, stay short. Let's see the British pound right now. Let's see. The British pound's at what? What is it? 138? I don't have my charts up. So 138 British pound. You can stay short. It's actually breaking down. Let's see what else. Canadian dollar right now. It broke support. Looks like next support is right under this 81 cents. Actually 81.25. And what else? Coffee. Coffee right now is right at resistance. At 155 is where resistance is. You're in a trading range right now between 150 and 155. So coffee's pushing up on resistance, but again, based on what I'm seeing and based on the technicals, I would expect it to test that support level at 150. A new one that I just picked up on the commodities market was Lean Hogs. Lean Hogs right now is trading at 115. You've got some support there about 112. If it breaks that 112 support, look for it to trade between 108 and 112, Lean Hogs. Lean Hogs was really extended. Now, one of the things I always talk about when it comes to Lean Hogs, that market is a very thin market. In fact, I think I've seen more short squeezes in the softs, in the Lean Hogs, the feeder cattle, and live cattle. I've seen more short squeezes in those markets. So, looks like Lean Hogs had a nice run, nice squeeze. I would play it to the short sides again. So I'm going to repeat all four of those again. British pound, stay short. Canadian dollar, stay short. Coffee, stay short. New short is Lean Hogs. So that's what I see. That's what's going on there. All right, welcome guys, welcome. Now let me jump to the cryptos. Oh, before I really jump to the cryptos, just real quick, I know you guys know it. Fed Chairman Powell was in the Fed had their meetings for the last 2 days. The Fed decided that our FOMC, the Free Open Market Committee, Federal Open Market Committee, I said free. Federal Open Market Committee decided to keep interest rates right where they're at. And in fact, they said they don't foresee them raising rates at all during 2021. So we had a little knee-jerk reaction in the market. Sold off a little bit, but now it's rallying back. So again, the Fed does not foresee them raising rates in 2021. The other thing about it is the Fed doesn't seem to be too stressed about inflation. They did talk about the shortage that we have in supply and raw materials and other things because of the pandemic, which could cause some particular items to have inflation, some particular items to see their price go up. But the Fed is pretty happy with the inflation in the U.S., and they see no reason why to raise rates. All right, so that's the Fed. So that's bullish for the market. Keep going, keep chiming. Believe it or not, I'm not sure how you make money in bonds now. The Fed's not lowering rates. They're pretty much going to keep them where they're at. So I'm not sure where you trade bonds for interest. And the fact is, the coupon rates, interest rates on bonds, the yield to maturities are really low right now. And with the Fed not planning on raising rates, they plan on keeping them where they're at. There's not much potential for capital appreciation in the bond market. Just a thought, just my opinion. But that's what I'm seeing. That's what I'm thinking. All right. Let's talk about the cryptocurrencies. Let's talk about cryptos. As you guys know, for the last I guess 2 or 3 months now, I've been tracking the cryptos, charting them, and I know we talked about it. So let me talk about it now. I'm going to start with, and I'm pulling up the chart, so just give me 1 second to pull up the chart. I wrote my notes, but I always like to look at the chart as I do this. Bear with me a second. I don't want that. I want that one. Yes. No, this is not the one I want. Bear with me a second. I do apologize for the delay. I have one of them that's all marked up already. And of course, just like everything else, when you want it most or need it most is when it doesn't show up, right? And of course, come on, where you at? Bitcoin, dollars. I might go to the futures market if I can't find it. Oh, there it is. All right. So Bitcoin has moved back into the trading range between 34. Actually, I take that back. Bitcoin actually just pushed through the $40,000 limit. It was in a trading range between 34 and 40. You have some slight resistance at about $42,000. And I would expect, hold on a second, let me make this a little bigger, a little more data. And let me also go back to a weekly. All right. Yep. So right now, 40, you've got some resistance right there around 42, and you've got some more resistance around 45. So that's what Bitcoin is, again, in that trading range right there. So again, there is some minor resistance at 42,000. And then you have some more. Then if it breaks above that 42,000, expect it to trade in the trading range between 42 and 50,000. That is what I see on Bitcoin. Let's see who else is next. Welcome, guys. Welcome. I'm going to Dogecoin now. Ooh. Bear with me a second. As I told you, I have these charts already. There's the one I want. Nope, that's not the one I want. Come on. Bear with me. When you actually, there's so many different, that's the one I want. Things on these coins. All right, bear with me a second. I need to zoom in. All right. So, Dogecoin, you're right at support. Near-term support is right where it is right now at approximately 31% on Dogecoin. 31 cents, not percent, excuse me. If it breaks this 31 cents, look for it to test that next support level at around 25 cents. So again, Dogecoin in a downward trend. It seems to have formed some nice support at 31 cents. It's been down here, 1, 2, 3 times, 4 times now in the last, since May, the sell-off in May. But again, if it breaks this 31 cents, your next major support's at 25 cents. You've got some near-term resistance at around, Dogecoin, near-term resistance at 38 cents. If you get through that 38 cents, look for it to attack 45 cents. As I said, if it breaks below this 31 cents, your next stop is 25 cents. So again, Dogecoin right at support, 31 cents. If it breaks below this 31, look for it to test 25. If it does run up, you have a resistance at 28 cents. You pass through, get through that resistance at 28 cents. Your next stop is 45 cents. Just looking at this based on the technicals, it looks like that selling has slowed down and that we're basically just trending at this 31 support level. So we'll see. As you guys know, this is all technical analysis. There's nothing fundamental that I like about Dogecoin. There's nothing there. But basically, since I know a lot of you guys are looking at it and trading it, there's Dogecoin. All right, Cardano ADA. Bear with me a second. That's the chart I'm looking for. All right, Cardano ADA. Right now, it's closed at $1.50, $1.50. I said $1.50, $1.50. You have major support at the 140 level. $1.40 level is major support. Right now, you're in that trading range between 140 and 180. If it breaks below the 140 support level, then you're looking at next stop would be 127. Somewhere around there would be support. If it breaks through resistance, which is at $1.80, making sure I'm reading the right one. Yeah, if it breaks through the resistance at $1.80, you could see it attack those old highs back up to the $2 and $2.40. Again, seems to be trading sideways. Volume is drying up or slowing down a little bit and is trading sideways. So it looks like it's in the trading range. Ethereum. ETH. Ethereum. Oh, that's not the one I look at. Ethereum. There's the one. Bear with me a second. Come on, where's the one with in dollars? All right, can't find it, so I'll just do it this way. I wrote my notes. Ethereum closed at 24.09 today, although it's still trading. But at the last print, it's in a trading range between 2,200 and 2,400 is your near-term trading range. I take that back. I'm sorry. Yeah, no, I'm right. 2,200 and 2,400. You've got, if it breaks below this 2,200, your next stop is about 2,100 to 21 to 22 range. If it breaks above that resistance, and you have your resistance at 280, 2,800. If it breaks that 2,800, the next stop is 3,200. That is Ethereum. Again, trading sideways. Going through a period of consolidation. Not bad, probably. The one thing good about consolidation is consolidation will shake out those who want to be out of a stock. Those who want to sell it and looking for a reason to sell it, consolidation is usually where you see them shake it off. My last one is Ripple. Ripple closed, last trade was at 83 cents, just a hair under 84 cents. Let's see. I've got support at right kind of here where it is. 79 cents, 80 cents is support. You've got some near-term resistance at $1. So it's in the trading range between 79 cents and $1. Near the bottom of the trading range, you need to see a hold support at 79 cents. If it doesn't hold support at 79 cents, your next stop is probably 60 cents. If you break through that $1, you've got some resistance in there, but you have major resistance at about $1.30, $1.40 range. So again, this is Ripple. And again, for the last 2 weeks, 3 weeks, they all look the same. They're going through a period of consolidation and a downward trend, but consolidation. And volume on all of them seems to be getting lighter. That's what you want to see. When the security is dropping in price, you want to see volume start to dry up if it's going to go back up. The reason why you want to see volume start to dry up is because what you're seeing is that the selling pressure is coming off. If the selling pressure is coming off, less selling pressure, once some buying steps in, that buying should actually rally the security. So again, that's what I see on the cryptocurrencies. All right, so I got that. I mentioned this last week and I want to mention it again. The meme stocks. Again, I went through, I've been watching them and looking at them, and I know a lot of you guys are watching the meme stocks. Let me explain to you what I would do. And I know I'm redundant on this, and I do apologize to those I've already told this to. The only way any institution, whether it's Reddit, whether it's the hedge funds, You, me, the only way we can actually take advantage of any type of information we have to make money in a security is to buy the security. So one of the telltale signs of the meme stock is, I went through and I looked at Wendy's, excuse me so much. I looked at Wendy's, I'm just going off the top of my head, Clove, GameStop, AMC, Beyond Meat. There's a couple others I can't even remember. My mind just doesn't grab them. KOS, KOSS. There was one more. Oh well. Look at all of them. Here's the telling tale. They all had over 100%, 200% increase in this 20-day moving average on volume before they started the move. The reason why I tell you this is, let's say, for instance, right now, I gave you some insider information. Guaranteed it was going to work. The only way that you can make money off that information is to buy the security. It's just that simple. Either buy the security, buy the stock, buy the option, maybe even, buy that. But the only way that you can actually make money on that news is to take a position. Now, if I'm going to go out here and tell you guys about a stock that, good information that's going to go higher, and I really want to front run you, which is what's going on right now, I'm going to take a position in the stock. I'm going to have all my friends and associates take a position in the stock, and then I'm going to start to tout it. All right? Volume shows up before the actual tout comes. I don't want to go into a long story. I was on the street for a number of years. I can just tell you, I actually knew a guy, shared office space with a guy. So again, I rented space on the trading desk. He was also on the trading desk. And the guy was a notorious front runner. And what he would do is he would write buy reports and send them out. Look, I'm ahead of myself. He actually would take a position in the stock, he and his partners, he and his friends. They would take a position in the stock at low price. In some cases, dollars, $1 or $2 a share. They would take their position. He would then write a research report. The guy was an analyst. He would write a research report, and then they would send it around Wall Street. And they would get investors to buy, and they would tell investors to buy and to buy. And they would end up driving the price of the stock up because they saw the increase in volume. There's a research report telling everyone how good the company was. And then inevitably, 2 or 3 months later, he wasn't as quick as the Reddit guys, 2 or 3 months later, he would go on vacation. And while he was on vacation, literally, I'm telling you, he was going on vacation. And while he was on vacation, at least one of the stocks that he was pounding the table and recommending would literally sell off and go back to where it started at before he started his research report. Saw it firsthand. Used to see it all the time. In fact, one of the last times that I was working in the office, renting space from there, he was about to go on vacation again, and my comment to him was, I won't say his name, I just said to him, Joe Smith, I'm making it up by the way, Joe, which one of your stocks should I get short? Because I know one of them's coming in. And the guy turned beet red and left. The reason why I tell you this is, again, if you're tracking these meme stocks and you want to trade them, track the volume. For you, volume's more important than the price movement. If you see a price movement with no volume, don't jump on it. All of them started with a huge move in volume before or at the same time there was a move in price. Again, the only way you can participate, the only way you can take advantage of this is you have to buy the stock. And they're buying the stock before the move. Now think about it. If I'm telling you that I'm going to front run you, I'm going to take my position before I tell the street about it. Once I tell the street about it and try and drum up that information, that interest, and the stock price moves up, I'm selling into the rally. When it comes to this, the last person holding the bag is the one that's going to get hammered. You do not want to be the last one in. When it comes to trading, you think about LIFO, last in, first out. All right? You want to be, you don't want to be last in, you don't want to be last in and first out. You want to be first in and first out. All right? That's how this works. Those are meme stocks. Next time, and I'll do my best. Next time, if you guys tell me who the suspects are, and I'll tell you what I do. I have on my brokerage account, I have an alert. And I have the most common meme stocks. Again, I don't trade them, but I see what you guys talk about and ask me about, and I put them on my watch list. And I literally was just adding some to my watch list today. And then what I do is I track them based on volume. And what's interesting again is I tell you, every one of these before the major run, volume kicked in. So again, track the volume. All right, that was my meme stock. Now, a couple other things. I don't know how long it's going to last, but the IPO in the tech market has started to heat up again. There have been a number of tech stocks over the last 2 or 3 weeks that are trading extremely well. I have to admit, in my nervousness about the market and the fact that these markets had not been trading well, I've watched a number of them trade higher but did not participate. One that comes to mind right now is APP, the App Lover. I think it's called App Lover, APP. I looked at it. Stock's been trading extremely well. Again, set a new high again today. The other one that I looked at was Global symbols GLBE. In fact, let me type in these symbols for you guys. So this is the ones these are ones that come to mind just right now, and the reason being is they've been trading really well. GLBE. All right, so then I posted those. Those are the ones, but there's other ones I'm looking at, but those two really caught my eye. Those two I'm watching. Oh, there's a third one. On this one, be careful, it's an ADR, which means it'll be affected more by what's going on in China than what's going on here in the US, but that stock is running like crazy. So that's the other one. It's called Monday. So those are three that that literally I'm looking to try. I've been tracking, been watching, and they're trading extremely well for IPOs. There's a couple other ones. Well, I wrote Monday, and let me just tell you this. Monday was priced at price range is 125 to 140. So when they talk about bringing this public, they were talking about bringing it public between $125 and $140 a share. They IPO'd the stock at 155. Today it closed at 208, or was right at 208 when I looked. I believe the old high or the near-term high is 220. So you want to look at that and watch it trade through the 220 number. On the global, the number on global is $52 a share. Now, two other stocks kind of popped up today. Very interesting. These two are on the short side. Now, I've mentioned one last week. The symbols, so let me write the word short. And the symbol, which I'll put in capital letters, which we talked about, was SMWB. I do apologize. I'm not good with the names. I can get the name for you if you want. I don't remember the name. I'm looking for it right now. SimilarWeb, SWB. Price range is 29 to 32 bucks. They priced it at 31 bucks. Right now it's trading at $28.31. You guys know what I'm going to say to you. When you have an IPO that has gone around Wall Street, has made what we call the roadshow, the dog and pony show, went out and told everyone how great a company they were, how good the numbers were, why everyone should buy it and invest in it. They told them all this good news, and the stock did not hold up on the IPO. There's no more good news that can come out that can drive this, other than investors just want to buy it. That's why this is a short. So look this short, SMWB. I had told you that, I think it was even 2 weeks ago. Still on my mind. Oh, I'm sorry, I gave you the wrong numbers. SMB. Yeah, SMB was priced at 22. I'm not sure where it's at now. I'll pull it up right now real quick. But it's a short. Bear with me a second. I'm going to pull it up. SMWB. So SMWB was priced at 22. I take that back. It closed today at $20.31, off a $19 low today. All right. So yeah, that's a short. The other one that I was just reading about was WalkMe. Came public today. WKME. I put the wrong symbol up. WKME. I'll type it in. Another short is WKME. This one came public today. Priced at 31 in the middle of the range and closed the day at $28.81. All right. This is a short, guys. Why am I not seeing that? All right, I'll figure that out later. That's walk me. Again, play it to the short side. That's what I see. That's what I think. And that is what I see on the IPO market near term. You got a couple other deals that look really, really good that came out. You know what else looked really good? I'm looking for the name. Oatly. Oatly looks really, really good. It's the oatmeal milk company that just went public. For those of you who are not into technical analysis, Oatly, Global, take a look at those charts. Those are the kind of charts that you want to actually own and buy. If you're not sure what a good chart looks like, pull these up and take a look at these charts. This is what a chart looks like. I'm looking at Global right now. Stock ran, consolidated, ran, consolidated, ran, consolidated, and right now it's going through another period of consolidation. That's what you want to see. And the reason being is during those periods of consolidation, the stock is not selling off. During those periods of consolidation, you have people taking profits. They got what they wanted out of the stock. Stocks coming down, or stocks seeing a decrease in volume. No buying has stepped in, but the stock is trading sideways. In other words, if the stock had come in and got cheaper, people would buy it. So they're holding it up, which means that they're buyers, natural buyers. The fast money came out, the traders come out, and then it goes from there. I like that. Andy Cornfield. Here's what's interesting. I am self-taught, so I'm going to show my age here. Back in the, back in the 80s, I never read a book on technical analysis. Never read one. At that time, I've read some since, but my first 5-6 years in the business, I never read a book on technical analysis. What I did was what I try and tell you guys to do, and that is I studied every chart I could find, good, bad, ugly, and I tracked stocks and I tracked the charts. I did not know what the Fibonaccis were, but prior to me knowing what the Fibonaccis were, I would look for a 50% retracement. I was actually using a lot of the Fib traits, even though I didn't know what the Fibonaccis were. So for those of you who don't know what Fibonacci's are a math calculation, mathematical numbers. I don't really know it that well. I know what it is. I don't use it. Don't get me wrong. I'm not against the fibs. In fact, when you hear me talk about a stock ran and 50% retracement and more than a 10% move, don't chase it. A lot of that comes from the Fibonacci's. The Fibonacci's act the exact same philosophy. I did not know that until someone brought it to my attention. But again, as Andy said, as Andy said, if you look at these charts, you're looking at a Fibonacci sequence. I'm telling you, this is what it looks like. When I see charts like this is when I get excited. And that's the reason why I brought up GLBE to you, and that's the reason why I brought up Global. And I'm just real quick. Now, Monday's chart doesn't have enough history. It's run for the first 3 days of trading. It's traded sideways in consolidation right now, and that's why I think it's going to have another run. It's going through a period of consolidation. The breakout above 220 is when I'd be a buyer. And trust me on this one. Hopefully I have a lot of things going on, but hopefully I'll catch this. I have it in my alert when it goes to that 220 number, and I'll probably be all over it. All right. Talked about meme, talked about that. Boom, 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 boom. All right, that's everything I had on my list today. There's some other stocks I do like. I mentioned Oatly. I don't want to go into those. Those are the ones I like. All right, so with that said, I am now open for any questions. If you guys want me to look at any charts or anything, feel free to share them or hit me up in the message box if you have something you want to look at. And by the way, if you have any trading ideas or any suggestions, feel free to post those too to everyone else on the call. All right. Oh, two other things before I forget. Boy, it's hot. I got the AC on and I'm still hot. What was I going to say? I forgot that quick. The heat's got my mind going. I haven't looked at that stock in I don't know how long. BJ's Whole Foods. Wow. I know some of my students are on this call, former students, and I know for those who are on this call that BJ should ring some bells for you. We actually talked about BJ's. It was really interesting. For those who want to know, some of my former students were in a competition, and one of the stocks was BJ's, and they just tore it apart. The stock was really not doing well. But yeah, it was not doing well. I will take a look at the SPY and the Qs for you. All right, so BJ's, I'm just trying to get a history here. BJ's at all-time high again. I'm looking at the weekly, now I'm looking at the daily. Bear with me a second, let me look at the daily a little more. Let me zoom in. All right. So on BJ's, really volatile, near term. And what I mean by that is you can see that the stock was at 49 and then basically sold off and dropped down to 38 within a couple of months. Now it's trying to fight its way back. Looks like you're right at near-term support. It's not a major near-term support, but you have some near-term support here. And if it breaks below this, your next major support is going to be around that $44 level. Look for it to take out that 50, that old high. If it takes out the old high, you might get a run on it. And it looks like the stock came in after earnings and then rallied from there. So you might get a little kick in it. That was BJ's. The other one was a TPR. All right, TPR, like the chart. Near term, no, it looks like you got a head and shoulders, believe it or not. Got a head and shoulders near term. You're right, you're probably sitting right at that support level, right around 42. So you want to see it hold this 42 number. You got some near-term resistance at 44. If it takes out that 44, you could challenge the old high up in the 48, 49, 50 range. If it breaks below this near-term support at 42, next stop is probably $40 a share. Again, head and shoulders, so it's kind of a bearish little chart right now. The one thing that's might save you is volume's drying up. So it's sold off, but it's in the trading range now on light volume. So you got a period of consolidation. For those who don't understand a period of consolidation, I always refer to this as a point where the bulls and bears are battling it out. Anytime it hits that high range in the consolidation, the bears sell it, the bears short it, and the bulls sell their position. Anytime it comes down to near-term support, the bears cover their short position and the bulls go long. That's the battle that's going on. If the bulls win, it's going to go to, take out that 44 number and go high. If the bears win, it's going to go down to that 40 number and then maybe even down to 37, 38, 37. All right, let's see what else I got here. Would you like to roast me in my trade today? Well, I don't like roasting people, but I guess share it with me. Tell me what it is. I'm looking now. So you tell me about the Fed. Hints of less QE in the future. QE is quantitative easing. The Fed basically said that they don't foresee themselves not buying anymore. The Fed says that they think they're going to continue to buy. I should not think. They said they're going to continue to buy in the market. What's up, Sarge? James, how are you? I will take a look at SWAV. I'm sorry. So for those who don't know, quantitative easing was a term that came up back in the big recession back in 2008, 2009, 2010. That's when the Fed basically was pumping money into the system. They did that basically by stepping in and not only just buying treasuries, but they started buying corporate bonds and other securities. It basically is pumping money into the system. The Fed basically said they were going to stop buying corporate bonds, but the Fed today said that they're going to continue to buy assets. What that means is the Fed's going to continue to put money into the system. If the Fed's going to continue to put money into the system, they're trying to kickstart this economy and keep it going. That's the reason why you hear people talk about inflation. But right now, the Fed's not worried about inflation. The Fed is worried about getting this economy started and back up to steam. So that's what's going on with the QE. All right. I'm just hopping around. SPY. SPY. I looked at this. I got, it's an upward trend. It looks good. I'm switching to a weekly chart. Upward trend looks good. The one thing I would say is over the last 3 or 4 days, volume has been relatively light, even though we're at new highs. You might see some volume kick. You might see some volume kick up tomorrow. Again, for the last 2 or 3 days, most people were sitting on the sidelines waiting to see what the Fed was going to say. But other than that, technically, it looks good. It looks good. Again, you had that run up back in, end of March, beginning of April, it ran up, and then we've been going through a period of consolidation. The Qs, I looked at the Qs this morning. I was upset at myself. I got stopped out of my Q position, and it was a great call, and I got stopped out. Oh well. So here's what's interesting about the Qs. You've got a double top right here at the all-time highs, 340. You got a double top. I mean, it penetrated all-time high today, then it pulled back and closed, but you got a double top. Now, again, like the S&P, volume has been light for the last week, 2 weeks. I would expect this thing, again, speculation, but I would expect this to, I'm just looking at this chart. The other thing about this chart too, since beginning of February, we have higher lows. All right, so we're going through a period of consolidation now, but since February, we have higher lows and higher lows. That was after the sell-off that I had kind of got the indication and went long in the market. That's why I'm pissed at myself. I went long in the Qs at 317 and got stopped out, and I'm pissed. But anyway, you can see here that we have a right triangle as well. Yeah, this is bullish. You got a bullish chart here in the Qs. Got a bullish chart. If it does pull back, your near-term support's at 324. I'm talking about the Qs, the NASDAQ 100. All right. What was said to make them tank? Let's see. The meeting with the Fed today, hence QE. I'm just reading this. Quantitative easing. SWAV. Shockwave medical, huh? All right. I'm looking at a weekly chart. I'm going to hit you with some numbers and I'm going to go back. You've got near-term support at 180. Near-term support at 180. It's really minor. Next support comes at 166. So there's a trading range between 180 and 166. And then if under that 166, the next support's 140. So you got 140. Yep, 140, 145, right around there. 166, 167, 180. And then you had the high today. It broke out. It didn't break out. There was no volume behind the move today. We might be at an all-time high, but there was no volume behind it. Let me switch this to a daily chart. Yeah, I stick by my numbers. Let me make this a little. Yep. So you've got near-term support right there at 180, 182. You had a little breakout. There's a little gap here, so I wouldn't be surprised to see it back and fill. Now, here's what I was talking about when I talked about this earlier. It looks like the old high was 182. A 10% move on that, I'm going to round some numbers, would be about $20, would take you to about 202. So the stock is not out of the buy range on this breakout from the old high. All right? And you can see that range, the breakup from the old high was 183, and right now the stock closed at 193. Now, here's the Fibonacci's. I don't know where it tops out at, but if it tops out at 193, let's say that's a 13-point move from 180 to 193. Expect at least a 50% retracement. Those are the Fibonacci's. It's going to retrace. And when it retraces, it's not breaking down, it's just retracing. You like to see retracing. Retracing means it's getting rid of the fast money. It's getting rid of the short-term traders. Think about it this way. It's like a forest fire. Forest fire actually gets rid of old dead wood, old dead forest, leaves, trees, and it refertilizes the ground. So in this case, we're getting rid of the short-term traders who are putting pressure on this. Overall, Shockwave Medical, I don't know what they do. Based on technical analysis, stocks are buy. Keyword there, based on technical analysis. Yeah. And if, by the way, this came from Twin, right? I think it did. Take a look at this chart. I'm not trying to be funny. You can kind of see the chart, especially since October, September, October. All right, I got that one. Let's see. Do you look at any other ratio? Sometimes I know that the Chicago trading firm said focus on Sharpe ratios. I don't look at those ratios. Sharpe ratios are performance ratios. Sharpe ratios measure risk reward. So Sharpe ratios are really good at telling you how you perform compared to, in terms of how much risk you've taken and how much return you've gotten. So again, it's a way of comparing different assets from different asset classes based on performance, and that performance is based on how much risk you took to achieve those returns. So case in point, I would probably have a higher Sharpe ratio on my purchase of EPAM, than I would have on my Sharpe ratio for a meme stock. And the reason being, the meme stocks have so much volatility, so much risk in them, that are you being compensated for the risk you're taking? That's a short definition of Sharpe ratio. All right, bear with me a second. Let's see. Lance, can you talk about sectors that will do well under inflationary pressures? I can tell you what won't do well. So one of the things that was interesting is gold sold off today. But during inflationary periods, you want to buy hard assets. You want to look at hard assets. Real estate. What else? Real estate. I used to say oil and gas, but I'm not even sure if you want to look at oil now based on what's going on with the greening of the global economies. But you want to look at hard assets. The other thing, you want to look at the consumer discretionary. Look at it this way. Even though prices are going to go up, during inflationary periods, typically we have more money. The reason why we go into inflationary periods and pressure anyway is because our economy as well as our consumers typically have more cash in their pocket. As we have more cash in our pockets, we tend to buy more things like consumer discretionaries, also your travel stocks. The thing I would say to you guys is track what sectors are actually going towards their new highs. Track the sectors that have stocks in the sector that are going to new highs, are trading near the new highs. That's what I would do. That's what I'm going to do. All right, let me see. James. For those of you who don't know, James is one of my former students. And I always remember James because I taught James one of my trading strategies, and James just went ballistic with it and was making a ton of money. I'm not sure what you're doing now, James, but you were one of my brightest students who understood and took it and ran with it. I'm not sure what this OLO is, but you can see IPO came public. I should know what it is. I'm just terrible. Came public. The first day high was 34. James, if you did what we talked about, which I know you probably did, that means you probably looked at buying the stock when it went through the move through 34. If you're still in it, you probably took your profits. If you're looking to buy it now, I would not buy it now. I would wait for a move through that old high of 44 and change. Right now, it looks like it's trying to test. So it's trying to test. It's looking like it's trying to move back into some of these trading ranges. So I'm not sure what they do, but if you're long, I guess you might have took your profits. If you're looking to buy it, again, you know how I am. I would wait, and I would wait for it to go through that 44 number before I got long. And I don't know what it was priced at, but the other side of the coin, two things. One is if it breaks that opening day price. If it breaks the opening day low, which is 29, it's going to have some trouble. If it breaks below the offering price, it's in trouble. And if it breaks below the $23 number again, it's in trouble. So there's a lot of things to the downside with this. Again, I don't know what they do though. I know I can find out though. I'm going to find out. Let's see, what is this? Company ticker, Goldman Sachs. And another one of these platforms. It's a restaurant platform. IPO to $25 a share. All right. So original range is $20 to $22. They priced it at $25. You can see the stock ran the first day. They priced it at $25 and ran the first day to that 35 number. So there's your numbers. 25 is one number. If it breaks 25, look for it to test at 23. Yeah, and it's been below this 25. Interesting. Been a rally. Yeah, James, unless you have a reason to own it, I'd be a spectator. Just my opinion. All right, any other stocks you want me to look at? I've got maybe 10 more minutes I can look at things. I'm going back and reading. No, I don't look at Sharpe ratios. What ratios do I look at? I think I mentioned this, and I'll tell you what I look at. You're going to laugh when I say this. I look at the number of stocks setting new highs. One of the things that's really interesting to me is the number of stocks setting new highs. I had talked about this. Let me bring it up again. My main strategy, which is buy high and sell higher. All right. And I know we went through this, and I'm not trying to, some of you have heard it before, but I went through this. Buy high, sell higher. All right. Now, the reason why I say that is, and I talked about that then, I'm going to talk about it again. When I start checking the number of stocks setting new highs, near the end of a bull market run, you're going to start seeing the number of stocks setting new highs start to actually decline. In a strong bull market, the number of stocks setting new highs is going up. In a weak bull market, the number of stocks setting new highs are going down. And in a bear market, the number of stocks setting new highs is definitely going down. All right. In other words, you could actually even have more stocks setting new lows than setting new highs. Now, when you actually have a number of stocks setting, basically all the stocks setting new lows, you're probably near a market bottom. But again, that's what I look at. So those are the things I look at that. And I guess the best way to put it too, Andy, is I'm a bottom-up guy. I'm a stock picker. So I look at things, I look at the stocks, and by looking at the stocks can kind of tell me what to do. Lance had brought up what companies should do well, what industry should do well during inflationary periods. Real easy. Check money flow. Follow where money's going. See where the money's flowing into, where the money's flowing out of. Wall Street is pretty good at positioning themselves based upon what they think is going to happen with the economy going forward. Track the money flow. Think about it. These institutional investors, these institutional money managers, portfolio managers, institutional investors, they, as a group, they're managing billions of dollars of money, and they can't make quick turns. So they actually have to position themselves based upon where they think the economy is going to go in the next 6 to 12 months. Track money flow. See where money's coming in and where money's going out. All right. Let's see. What you said earlier does not mean you think that SPAC craze is back too. For those of you, the special purpose acquisition corporations, when you guys buy those things as IPOs, I think it's the worst trade you can do. I think so. James, I'm going to get you on your SBLK. I didn't forget. It's one of the worst things you can do. And the reason being is, think about this. You're investing in a blind pool. You're investing in something that has no assets other than cash, and you're investing in something that, based upon what you think the portfolio manager, the manager of the SPAC is going to buy. And as I mentioned also, be careful too, because managers in the SPAC are getting are buying the stock for their own accounts and for themselves at a different price and different level than you. They're cutting side deals. So just be careful with those. I'd be more interested in, like I said, looking at those after they've gone public. DraftKings came from an SPAC. So there's some legitimate good companies that are coming public through the SPAC, and that's when I would look at those. I would look at them after they have stocks in their portfolio. All right, SBLK. I don't know if this is good or bad. The reason why I say that, okay. As I mentioned to you guys, James, who gave me this, is a former student of mine. And James tends to look at things a lot like I do. Although, James, I'm not sure how I feel about this SPLK. Tell you why. I pulled up a monthly chart going back. So based upon, I guess, stock splits and everything else, this stock at one point was a $1,200 stock. Right now, I guess since 2016, the stock's been trading between $6 and $20. It's been a really tight trading range. All right, now I'm going to switch to a weekly chart. SBLK. Big fingers. SBLK. All right. So near term, the stock has run. Near term. All right. There was a trading range between $19 and $22. It's run to 24. I understand why James is looking at this too. Shipping. Yeah, I mean, it's got a really great chart for the last year and change. My only concern is I know this stock is hanging overhead, and I know it's been some years on it, but that's the only thing. You know, my comment: buy high and sell higher. So it makes me. This is just me. I just don't like stocks that have higher highs somewhere else. So you're looking at a near-term high for the last, I don't know, 4 or 5 years. But prior to that, yep. So it sold off. It started selling off, gosh. It started selling off basically in it sold off before then, but from 2014, it was at $80 and sold off. So again, James, near term you might see some trade in there, some money, but I wouldn't stay with it long term just because it's not. Let me slow myself down. I don't think it's the kind of stock you want to hold for the next 5 years, 6 years. You might see a trade in here. I'd be nimble. Might be a good story behind it, but at some point you're going to come under selling pressure from these institutional investors who've had this position for the stock maybe for the last 5 or 6 years or whatever the case may be. All right. Let's see what else. NVIDIA. Due for a stock split. I didn't know that. NVDA. All right. Yeah, James, I figured that. When I looked at the chart, I figured this was a pure cyclical play for you, and that you were just basically looking to take advantage of what's going on in the world with the pandemic and shipping and so forth. All right. NVIDIA. Some consider maybe the best chip company in the world. So they announced a 4-for-1 stock split. The stock has run. I'm not sure when they announced it. It's due to split on July 20th, based upon what Lance is telling me. There's a strategy out there. I talked about this, I don't know when. I talk about a lot of things. They call it stock split accumulation. So let me add a couple things. One, as you guys know, why does a company split their stock? They do it for 2 reasons: to increase liquidity and to lower the stock price. Now, the stock is currently trading at $712. They're doing a 4-for-1. So they're about to cut this stock price down to about $178, $200 a share. So they're going to lower the stock price, and they're going to increase the number of shares outstanding. For those who don't understand what's going on here, the math, it's real simple. Let's say you have 100 shares of NVIDIA at $712. Well, they're going to take that 100 shares and multiply it by 4. So instead of having 100 shares, you're going to have 400 shares. But instead of owning the stock at $712, you're going to own the stock at $178. The market value, the value of your portfolio is not going to change. But let me add some color to this. The only reason why a corporation can split their stock is their stock has been going higher. Let me say it again. The only way that a company can split their stock is if their stock is going higher. No one's going to buy a company that's splitting their stock when the stock is in a downward trend. No one has interest. All right, that's the first thing. The second thing is that there's which I had mentioned, there's a strategy called stock split accumulation. And that is to buy the stock ahead of the stock split and buy the stock after the stock split. The thought process behind this is that once the stock splits, it's going to go back to its old high. So in other words, that old high price is $712. They believe that after the stock split, the stock will go back to its old high of $712. Now in this case, it's a 4-for-1 split, so it's going to take some time, but that's what's going on. The one thing I'll say to you guys is, and I'm putting up a weekly chart, you are looking at the best chip company in the world, quote unquote. So if you do have an interest in this sector, this is probably the stock that you want to look at. Yeah, and I'm looking at the chart. I'm looking at a weekly chart, just so you know. There was a heavy consolidation for the last year and a half between $500 and $600. And then it finally broke out of that the last couple of weeks, couple of months. I'm looking at a weekly chart. Let me switch it to a daily. Check my time. Oh, I got to get off here in a minute. All right, so again, for those who ask, Lance, you can buy it here. I know it's extended. The extension came when it moved through $640 $640. It just ran. But it's been doing some back and filling over the last couple of days. Earnings came out. They were better than expected. The estimate was $3.29. They came in at $3.66, $3.66. Earnings were better than expected. Wall Street's probably raised their numbers. The tech stocks are taking off. It's probably not a bad trade here, especially ahead of the stock split. For those, remember, I think it was about a year ago, we had the same conversation about Apple. And I know a couple of you brought Apple ahead of the stock split and did extremely well with it. So again, that's what's going on there. I'm looking at my time. I don't have, you know what, as you guys know, I can't stay on longer than an hour. If I stay on longer than an hour, I lose my recording, and I do want to post this. So I'm basically going to sign off for now. I do appreciate you guys coming. Remember, if you do anything, speak with your financial advisor first before you do anything. I appreciate you guys coming on and actually sharing some of your trading ideas and some of the things that you're doing. As you guys know, I'm a team-oriented guy, and one of the things that I recommend to all investors is that you build a team around you, a like-mindedness that will help you trade. You cannot monitor and track these markets by yourself. You just can't do it. So get your team together, get some like-minded people. When I say like-minded people that are making money in the market, not like-minded people that are losing money. You want like-minded people that are making money in the market, and then you guys can start sharing ideas. All right, have a great week. Keep putting money in your pocket, and I will see you next Wednesday. Professor Milligan out. Another Wall Street Wednesday, excuse me. All right, have a great week. Talk to you guys later.